I'm a first-gen Latina who has managed to save and invest over $450,000, and here's what I would do if I had an extra $10,000 and wanted to invest that today. You can start investing really with any amount. So even if you have an extra $10, $100, $1,000, $10,000, the strategy doesn't change. The first thing that I would invest in, and the biggest thing in my portfolio right now, is an index fund of the S&P 500. I currently am with Fidelity, so it would be FXAIX. And if you do Charles Schwab's or some other brokerage, they have their own. The S&P 500 index fund tracks the top 500 companies in the US. It's really easy, low cost, and has had a great rate of return over the past 10, 3, even 5 years. The second thing I would invest in is a target date fund. If you're unfamiliar with what a target date fund is, basically is a one and done type of fund. Mine is the one here, but essentially all you do is pick the year that you want to retire, something like 2065, 2055, 2075. It'll just say target index fund 2065. It's great because it automatically adjusts over time. So it's a little bit more aggressive the younger you are and gets a little bit more conservative the older you get and closer to retirement. You don't need to be able to invest in individual stocks. You need something just boring that can be held long term and have great rates of returns over the next 5, 10, 15, 20 years when you're planning to retire. But hopefully that helps. If you like what you're seeing, please follow along in my financial literacy journey as a first gen. Hopefully that helps, and thanks for watching.
I just hit $100,000 in like my Fidelity investment accounts, and of course you guys had to be the first people that I told. And here's my proof, $100,714.21. But this is where it gets real impressive. April 2023, $3,000. Boop, I had a big jump this last month. Now there's going to be two sides to the spectrum. I'm 29, by the way. There's going to be people that are like, I have way more than that. Okay, great for you, right? And there's going to be people that like wish they had that amount, which you totally can. It's possible. But 3 years ago, in April of 2023, I was 26 years old. I'm 29, okay? I was negative $31,000. Negative. And now I dug myself out of that debt, got to $100,000. Now that's not my net worth. I actually have more money than that. My overall net worth is between like 155 and 160. And it's not the amount that's impressive to me. It's in the time period in which I did it. To go from a negative $31,000 net worth to a positive $155,000 net worth in 3 years, that is what impresses me. Like, I did that. It has been a huge goal of mine to have $100,000 in my investment accounts alone before I have my first baby, and she's going to be here in July. And I would also like to add, that's not my retirement account. Half of that is my retirement account. The other half is like brokerage. Anyway, let me have this win. Do not try to take it away from me, because I'm just going to assume you're doing worse than me. Because it's never the people doing better than you. And I wish I could say that it was one income that did that. It wasn't. It was 3. Actually, more than 3. It was probably like 3 to 5. But also in that time period that we can't ignore, I bought 2 homes in that 3-year time period. So we went up a positive $155,000 net worth, dug ourselves out of 30 grand of debt, and we quite literally, wait, what did I just say? Bought 2 houses. I'm impressed with myself, low-key. Anyway, I'm just an average Joe. Like, you can do it, I promise. It just takes a lot of hustle and drive, and I had the worst year of my life financially last year. Well, okay, worst year of my life. That's a little dramatic. Financially, last year wasn't great. I still hit over 6 figures for sure. In fact, compared to 2024, I think I made 60% in 2025 of what I made in 2024. And I still invested the same amount of money, which is kind of crazy if you think about it, because like consistency always wins. Anyway, that's my win of the day. And I can confirm the money worries never stop. If you would have told me like 3 years ago that by the time I was 30, I'd have over $100,000 invested, I would assume that I wouldn't be stressing about money, but I do. The stress just looks a little bit different.
This is why every single person should be investing in the stock market. This is my portfolio. This is what my investments have earned me in this year alone. We are 8.5 months into the year, and I've earned almost $10,000 by doing absolutely nothing. All I've done for the last 6 years is max out my Roth IRA, and 1 year, just 1 year only, I worked some overtime and also had some side hustles, so I also contributed $6,000 to a brokerage account. I opened my Roth IRA when I was 22, but I did not take it seriously until I was 25. I'm 31 now. As you can see down here, I've only contributed $44,000, but my value of my portfolio right now is $74,000. That means I have nearly $30,000 from just going on the internet and clicking some buttons and then waiting. That is the power of investing. So I'm 31 now. My initial investment is about $74,000. If I contribute to just max out my Roth IRA, that's $7,000 of investing a year. That's $583 a month. I'm investing for 34 years until I'm 65, and the interest rate is an average of 10%. The stock market has returned an average of 10.6% for the last 100 years. If I do that, I could retire with over $3.5 million. If you want to see more content about investing and budgeting on a lower income, don't forget to follow.
My exact Roth IRA balance from age 19 to age 26. At age 19, I opened my Roth IRA and put in $1,500 as my first contribution. I felt like I didn't know what I was doing. I was worried I'd mess it up, but it turns out it's actually more simple than I thought, and I wanted to share what realistic progress can look like. Later that year, when I felt less suspicious at investing, I put in more money, bringing my total to $4,600. At age 20, the next year, I maxed it out and ended the year at $13,000. At age 21, I did the same the next year and ended at $19,000. Slow growth, mostly just my own contributions. At 22, this was the year my account was actually down, so I ended with $17,000. The market dropped, and this is where most people quit, but it is very important that you don't sell and that you don't stop investing. At age 23, things started to recover, and I ended the year with $24,000. At 24, that compounding growth really kicked in, and I had $41,000. Last year, at age 25, I had $50,000. And now, currently, at age 26, I have $65,000 in my Roth IRA. The crazy part is, over the years, I only put $41,000 into my Roth IRA. That's the money I earned from working. But the account is now worth $65,000. That extra $24,000 didn't come from my paycheck. It's just pure growth while I was sleeping, working, doing whatever. It's basically free money. If you don't have one yet or you don't know where to start, comment below and I'll show you exactly how I did it.
Here's what I invest in as a 29-year-old working towards financial freedom, without investing in fossil fuels, weapons, and companies who violate human rights. And yes, my portfolio still performs. Just remember that this isn't financial advice, and I'm just sharing this for educational purposes. So my portfolio is in 5 funds to ensure that I'm diversified. So 50% is in the Vanguard ESG Global All Cap. This means that my investments are spread across thousands of companies worldwide so that I can have broad exposure to the market. But it is not invested in any companies that violate the UN Global Compact principles, which covers human rights, labor practices, and anti-corruption. 15% is in the iShares MSCI World SRI. This has even stricter screening. Only the top-rated companies for responsible business practices sit in this fund, and the big one for me that it avoids is nuclear weapons. 15% is in the Vanguard Emerging Markets ESG Screen Fund because I want exposure to growing economies and I don't want my portfolio to just focus on the US and Europe. 10% is in the iShares Global Clean Energy ETF because I think this is where the world is headed. It's very telling that this fund has performed particularly well in the past couple of years. Just be mindful that this fund moves around a lot, so personally, I'm holding this for the long term. And then 10% is in iShares Physical Gold. This is basically my stability pick when markets dip. Gold tends to hold pretty well, but it only makes up a really small percent of my portfolio. Now, I really want to be clear about this. ESG screen funds aren't perfect. They screen the worst offenders, but they don't actively fund towards the solutions. So my personal strategy is to build my portfolio mostly with ESG screen funds because they're a bit lower risk. Then I'm going to shift to more impact investing as my portfolio grows and I can tolerate the risk a little bit more. Oh, and if you're wondering about performance, Morgan Stanley's data has shown that sustainable funds have matched or even outperformed traditional funds in the long term. So you're not necessarily sacrificing your returns if you care about what your money funds. And remember, you can always refine your investing strategy. I know I'm going to, but you can't get back the years of compound growth that you miss while you wait to be absolutely perfect at investing. So if you want to know more about this, then hit that follow button.
Okay, so people wanted to know what stocks I held to bring me a return of $8,340 this year, so here it is. I will tell you exactly what I hold in my brokerage account and their tickers. So here they are. The first one is actually, I do a lot of ETFs, so these that I'm going to be going over are all ETFs. And the first one, the ticker is BND, which is basically an ETF for bonds. Next ETF I invest into is QQQ, and then the next ETF is actually an energy ETF. That one is called VDE. And then from there, I invest into a healthcare ETF as well. The ticker for that one is VHT. And then I also hold a Vanguard real estate ETF as well. That one is VNQ. And then I also do hold VU. A good majority of my investments are held in VU. That's majority of my portfolio. And then I also invest into an international ETF. The ticker for that one is VXUS. Like I said, all of those are ETFs. That's just what is easiest for me. But I also do invest in 3 other just single stocks. And for those, I hold Apple just because I genuinely love Apple products. I use them every day. So I just invest into the company because I like them. I also invest into Microsoft. And the last one is NVIDIA. That is exactly what I hold in my brokerage account. I'm very transparent and I want to help people because when I first started out, I didn't know what to invest into. I didn't know how to get started. And I watched videos exactly like this to help me get started. So hopefully this helps you.
Here's the 3 funds that took me to my first 100,000 from someone who actually works in finance. And if I had to start all over, here's what I would do differently. There are multiple ways to get to your first 100,000. It doesn't have to be the same portfolio that everyone else has. But that doesn't mean if I could go back in time, I would invest in the same exact things. So when I first started working at Vanguard, I was invested in VPMCX, which is the Vanguard Prime Cap Fund. I really didn't know anything about finance. I was like 23 years old and was not a finance major, had not really done any type of investing. And I just remember people like raging about this. They were like, this is the must-have thing inside of your 401k. I ended up moving my money out of this fund. It definitely helped me get to 100,000. But if I were to go back in time, I probably would do something more like VUG to target growth exposure instead of doing the higher cost mutual fund. And then I moved over to Fidelity and changed up my investments. And the next fund that basically got me to my next 100,000 was FDGRX, which is the Fidelity Growth Company Fund. It is unfortunately closed to new investors, but look it up if you're curious. I actually am still invested in this one because even after reviewing a ton of other ETF options and mutual fund options, even though I'm not a massive fan of mutual funds, I think the performance in the fund manager is just something to not be ignored. And the last one is FBGRX, which is the Fidelity Blue Chip Growth Fund. Now, I don't actually own this fund anymore simply because I just thought there was too much overlap between this and the previous one that we talked about, but it was a part of my journey in getting to multiple 6 figures. I'm going to share more in my Reorganizing My Portfolio at 30 series, so be sure to stay tuned for that.
Let's break down my investment portfolio as a married 33-year-old with a $917,000 net worth who grew up in a trailer park. For what it's worth, I started investing in 2019 right after I paid off $100,000 in debt. After we bought our first house in 2021, we really started ramping up how much we invested every single month. And now every single month we invest roughly 50% of our income. We've been able to do that by keeping our spending consistent regardless of the income raises that we've gotten over the last 6 years, and by just avoiding debt at all costs, to the point that we don't even use credit cards anymore. The first investment is my 401k. I've maxed this out every year for the last 4 years and have a total of $143,000 in there right now. I used to have that entirely invested in target date funds, but I've realized, at the age of 33, I should probably invest my money with a little bit more risk. And so I moved all of that over into an index fund that's called FXAIX. It's basically a total market index fund. Next up, we have a joint brokerage account that has about $240,000 in it. The top holdings are all index funds, and they're probably ones that you're already familiar with. It's QQQ, VU, and SCHD. We have about 5 other index funds, but we also have about 20 different stocks that we've invested in, with the 3 largest positions being Amazon, Tesla, and Nvidia. Then we have my wife's IRA account, which has $76,000 in it. That is entirely in the index fund VU. And similarly, my IRA is entirely in VU, but I have about $25,000 in mine. It's probably the area where I'm kind of the weakest in, I'd say, at the moment. When I say weakest, I just mean I really started investing in my IRA much later. There's caps to how much you can invest in every single year. And so I feel like I should have a lot more in my IRA account at this age. I also have $60,000 sitting in an emergency fund where it gets somewhere around like 3.7, 3.8%. That's with the bank Ally. We actually had it much higher at one other point, but we realized we're spending less than $7,000 on all of our bills. Having more than $60,000 is probably a little bit, aggressive. But my wife is also about to be giving birth. We set aside $25,000 in a completely separate savings account. That money is to cover, her time off because she's self-employed. It's also money that we use because she pays taxes all at once at the end of the year because, again, she has her own business. So we set aside some of those taxes. We've mixed them in the same account. Maybe we shouldn't do that. Oh, well. We also have a joint checking account that has $16,000 in it. Personally, I think that's a little bit too high. And all the rest of our investments is purely in real estate. We rent out our first home. The mortgage on that is $369,000 with a 2.8% interest rate. And right now, that house is probably worth somewhere around $550,000 according to Zillow. So a difference about $181,000. Then we have the house that we live in right now, which we have a mortgage of about $449,000 on. Zillow has that one priced at $572,000. That doesn't account for any of the remodel work that we've done. We redid all the bathrooms, we redid the kitchen, et cetera, et cetera. We've redone pretty much everything. And we got our house refinanced because we had a much higher rate. When we got it refinanced, they appraised it for $670,000. I feel like that's a little bit high. Let's say $600,000 is the price of the home. That would be a difference of about $151,000 for a grand total of $917,000. We have a goal of trying to get to $1 million by the end of the year. I think that's pretty aggressive, especially with a kid on the way. But, I'll keep you guys up to date on how it goes.
In 2022, I invested $6,000 into a taxable brokerage account. Here's exactly what I invested in and exactly how much that money has grown in the last 3 years and 3 months. I invested this money in December of 2022. I bought $6,000 of VT Sacks and that's it. And by the way, for those of you who think that you don't make enough money to invest, I made $59,000 that year gross, and I invested $12,000 in total, and I saved an additional $6,000 in cash to dump into my Roth IRA first thing in January 2023. And that is the power that learning to budget and live below your means gives you. Anyway, VT Sacks is a Vanguard mutual fund that tracks the entire US stock market. It's the mutual fund version of VTI, which I talk about a lot on this page. The difference between VT Sacks and VTI is that VT Sacks has a minimum investment requirement of $3,000. It also has a slightly higher expense ratio of about 0.04% compared to VTI's 0.03%. So why did I choose VT Sacks over VTI? Because at the time, you couldn't buy fractional shares of VTI, and I prefer to invest dollar amounts, not in amount of shares. You also couldn't set up automatic investments in VTI, which I thought I might want to do at the time, even though I never did. But now you can do both of those things with VTI if you use Vanguard. Anyway, 3 years and 3 months later, that $6,000 I invested has turned into $10,776. That's nearly $5,000 of investment returns and a rate of return of nearly 20%. Hopefully this video shows you the power of investing.
Let's break down my investment portfolio as a 25-year-old who has an over 6-figure net worth. I put my first investment in the stock market back in 2020, back when I had a negative net worth. And then 2022 is when I really started to ramp up my investing. I was investing every single month at least 10% of my net income. Starting with my Vanguard investments, I have $35,212 that's sitting in my previous employer's 401k account. And this money is entirely invested in a target date fund for 2065. Next, I have my Roth IRA brokerage account where I currently have $20,648. Money is entirely invested in VOO, which is a Vanguard index fund that tracks the S&P 500. Next, I have a pretty small amount. I have $1,312 sitting in a SEP IRA account. I mainly built this account last year to use as a tax write-off, but right now I have all of this money invested in VTI, which is the Vanguard ETF index fund that tracks the total US stock market. Next, I have a traditional IRA account, which I will be converting to a backdoor Roth IRA. It has a total of $3,802. This is evenly split amongst investments in VOO, which is the S&P 500 index, VTI, which is the total US stock market, and VT, which is a total world index ETF. Next, I have a traditional brokerage account, which has about $4,565. This is money that I can access pre-retirement, and this is entirely invested in VOO, which is the S&P 500 index fund. Finally, through my current employer, I have a 401k that's managed through Charles Schwab. This has $20,517 in it, and every month it's auto invested in a 2065 target date fund. That's my total portfolio at about $86,000 right now.
And this here represents the weighted average of each of my investments.
Take me.